Katie Filling here with Patti O'Connor from IntroLend Capital Mortgage. In today's market, it's crucial to find creative solutions to be able to afford the home you want. One popular option, especially in a high interest rate environment, is a temporary buydown, specifically a 2-1 buydown. So Patti, can you tell us a little bit more about how that works?
Sure, I'd love to. It really is a great option for buyers to get a lower payment. It works by the seller giving a 2.375 credit to the buyer, and it lowers their payments over the first 2 years. So an example would be of an $845,000 purchase with a 20% down payment. And let's use a 7.5% interest rate. The first year, the rate would be 5.5 and save the client $888 a month. The second year, the rate would be 6.5 and save the client $453 a month. The credit on this would cost the seller about $16,100. So it's a much better option than lowering the price, and it helps the buyer get a lower payment.
Yeah, absolutely. So that's a great option for a buyer as well as a seller to offer as an incentive to get their home sold. So then what happens after those first 2 years?
That's a great question. So after the first 2 years, it goes to the 30-year note rate. And how it works during those 2 years is that the money from the seller is put into like an escrow bucket. And each month we pay the difference between the note rate, let's use 7.5 in this example, and the note and the buy down rate the first year 5.5. So every month we take that money, the difference in the payment, the $888, and we pay the payment. And in the second year we do the same thing. We take that $453 out of this escrow account and we pay it to the mortgage. And then on the third year, it goes to the note rate.
Absolutely. And so then, obviously when we start to break this down, it makes a lot more sense, but I think it can still be a little bit overwhelming to a buyer who's going through the process. So then how do you step in to guide them and be there every step of the way for them?
So 60 days prior to the rate changing, I will reach out and let the buyer know it's coming, because they need to know that the payment is going to go up, and I'll let them know the amount it's going up by. As far as refinancing goes, again, we believe that rates are going to come down in the next 12 to 18 months, so I will keep them on a list and let them know what the rates are when they start to come down, and if they want to refinance, we can. If they want to wait a little longer because they are enjoying a nice low payment, then we can wait for that time too.
Great. And if a buyer does want to start the conversation to explore some options like this, where should they start?
They can call me directly. They can reach out to their agent and have them call me, but they can call me directly and we can go over the numbers. We can go through some scenarios without them applying, and really just kind of get them to be comfortable with the process and what it looks like.
Absolutely. Well, Patti, thank you so much for joining us today and explaining the 2-1 buydown. If you have any other mortgage related questions, feel free to drop a comment below, and thank you so much for watching.